Crypto is in trouble. The financial woes facing the industry just got worse with the collapse of Signature Bank and the depegging of stablecoin USDC. It's not just the crypto companies that are taking a hit, but US banks too. Analysts are going more cautious, and it's all adding to the pressure on digital asset broker Coinbase Global. Depositors at Silicon Valley Bank and Signature Bank will get their money back. But the collapse of Signature Bank means the end of its Signet interbank transfer system, which has already impacted liquidity for Bitcoin and is likely to make digital assets more volatile moving forward. This is bad news for Coinbase, which has a revenue sharing agreement with Circle to hold its customer dollar balances and corporate cash in USDC. USDC is critical to Coinbase, accounting for 80% of its interest income in quarter four and 23% of its total revenue. If USDC's market cap remains at current levels, it could drag down Coinbase's 2023 revenue by almost 2% or more. So while Coinbase's stock was up 2.5% in volatile trading early Monday, the crypto industry is facing some serious challenges. We expect liquidity and trading volume to decrease until someone fills that void, and the uncertainty will linger in USDC and the industry. It's just one more thing for investors to worry about as the Dow Jones Industrial Average and S&P 500 swing around to start this week. But there is some hope on the horizon. The Federal Reserve has announced that additional emergency funding would be made available to other eligible banks in a backstop, which should help stabilize the financial system. And while the collapse of Signature Bank and the depegging of USDC have caused some serious disruptions, it's worth remembering that the crypto industry is still very much in its infancy. As with any new and disruptive technology, there are bound to be bumps along the way. But for those willing to weather the storm, there are likely to be significant rewards. While the short-term outlook may be uncertain, the long-term potential of cryptocurrencies and blockchain technology remains as strong as ever. So, while the collapse of Signature Bank and the depegging of USDC are certainly cause for concern, they should not be seen as the end of the road for crypto industry. Instead, they should be viewed as a wake-up call for the industry to redouble its efforts to create a more stable and secure financial system that can withstand the challenges of the 21st century. In the meantime, investors in Coinbase and other crypto companies will need to keep a close eye on developments within this industry and adjust their strategies accordingly. It may be a bumpy ride, but for those with long-term perspective and the potential rewards are still too great to ignore. So stick with us, all right? Don't forget to like, thumbs up, subscribe, and follow for more daily updates. We'll see you next time.